They're getting warnings now. It would be $1 billion impact every week that the government is shut down. That's according to Tourism Economics. $1 billion in losses because of disruptions in air travel or train trips, because national parks and museums would likely close. We certainly have seen that happen in past shutdowns. U.S. Travel, which is the trade group representing the industry, sent a letter to congressional leaders calling a shutdown a wholly preventable blow to America's travel economy. Quote, the longer a shutdown drags on, the more likely we are to see longer TSA lines, flight delays and cancellations, national parks in disrepair, and unnecessary delays in modernizing travel infrastructure. There's a lot of those projects going on. This was according to CEO Jeff Freeman in a news release. They're pointing to an Ipsos survey that showed 60% of Americans say they would cancel or avoid trips by air in the event of a shutdown. But look, the travel industry has already seen softer demand in the second quarter through summer's end. International travel is noticeably off, especially from Canada. Hotel executives publicly have grappled with shrinking government business because jobs were slashed earlier this year. There were fewer government people traveling, staying at hotels. If you have whole departments shuttered and federal workers furloughed, that most certainly would hit the travel industry, not just hotels, but restaurants that cater then to government workers who go to conferences and things like that. So it has a ripple effect beyond just TSA lines, so to speak.
Right.